Hey tax students, in this video what we're going to do is learn how to prepare tax returns using the software that comes with our textbook called Intuit ProConnect Tax Online. So let's take a look at the assignments here, and we've already done the tax return for the Hosers. If you remember back here in this chapter 2 homework C, we did a simulation of preparing the tax returns for the Hosers at the CNOW site. And we did it again by filling in the PDF tax forms that you uploaded here in Laulima. But we're going to do it one more time using again that ProConnect Tax Online software and uploading it again here in our Laulima assignments folder, which is this assignment right here. So let me open up the instructions. Before you can use the software, you need to apply for a student ProConnect account. So I have the procedures linked over here. Okay, so once you set up your account, then you can log in to the ProConnect site, either by the address in the instruction link here, or probably easier, since we're going to do it more than one time, log in using this ProConnect link here in our Laulima site. And you will typically see something like this after you log in. This welcome screen, really this tab over here. And in this menu, the main items we'll be using is clients to set up new clients or edit old clients, existing clients. And then once they're set up, we can prepare tax returns for them. So as you can see, I have quite a bit of clients here because I've been using this software for our class for a few years. But we're going to be setting up the Hosers as a new client here. And eventually, we'll prepare tax returns for them here for the year 2023. And that's our version of the textbook, tax laws for 2023. And you can see I don't have any tax returns here. But if I go back to the previous year's version, 2022 for ProConnect, you can see, no, there's no returns here. How about 2021? Okay, a few tax returns. But make sure you're on 2023, yeah, when you start preparing returns. Now, to make it easier for you to look at the information that we're going to be entering, instead of going back into the textbook, I have a link right here. So I've downloaded and saved the problem as a PDF file. So that's this screen here. Yeah. All of this information, again, we've used before to do the simulation and the fillable PDF files. But now ProConnect will prepare this 1040 form. Also, I believe is schedule number 1, and also a qualified dividend worksheet that you had prepared manually before. So just to review quickly some of the facts we're going to be entering. This is for a married couple, Donna and Chris. Donna is the main breadwinner for our couple here, and Chris is a student that also works part-time. Both of them have W-2 forms that will be duplicating in the software. Some other types of income we have are from 1099 forms: interest, original issue discount, and dividend income. Chris has a scholarship, and all of this money is being used for qualifying education costs. So we can pretty much ignore this scholarship money. Now, if he had excess scholarship that he didn't use for qualifying costs, possibly that excess scholarship would be taxable. Or if he has excess qualifying education costs, what we'll find out in chapter 7, a future chapter later this semester, maybe they can claim an education credit. But that's not the case here. Yeah, no scholarship income, no excess qualifying education costs. Some other income they have is Chris had an award or prize of $10,000, and it should be reported to them on a form 1099 miscellaneous. Here it says it's not shown, so we just got to enter it into the software without that form. Some other small amounts that Donna had received from her employer were football tickets and some flowers. Okay, kind of minimal, but we're assuming anything that was taxable is already included in Donna's W-2 form from her employer. Chris has a son, and he pays child support to his ex-spouse. We learned back in chapter 1 or 2 that child support uh, is not a deduction. You cannot automatically claim a child as a dependent if you pay child support. Typically, the dependent child, is claimed by um, the parent that the child lives with, and that's not the case here for Chris. Chris had inherited some money from his deceased aunt. Usually, inheritances and gifts are income tax free. Now, if the person who gave the gift or had passed away was a multimillionaire, possibly there could be something called estate and gift tax. Yeah, not income taxes that we're learning in our class. So let's take a look at the forms that we need to re-enter into the software. So here is Donna's W-2 form. So all these numbers here, we would have to re-enter them into the software, including this miscellaneous items here with these code letters C and DD. If you want to know what they mean, you would flip over the W-2 form to take a look at the instructions to see what the code letters mean. In this case, this $48, I believe, is taxable term life insurance benefits. Usually the first $50,000 of coverage for term life is tax-free. So Donna probably has more than $50,000 of coverage, and she has to pay taxes on that. DD is the code for health costs paid by the employer, probably health insurance premiums. And that's a tax-free benefit, but it still has to be reported here in the W-2, and we got to re-enter it into our tax software. I'm not sure why this amount is reported here in box 14. I would have thought that flexible spending accounts, typically withheld from the employee's pay, or an additional benefit to the employee, would probably be either here. Maybe this was paid by the employer, so it's entered here, and it probably is not going to be factored into any calculation we need, but still being disclosed. Yeah, flexible spending accounts that we had talked about back in chapter 2. And because they live in Florida, Florida has no personal income taxes, so it's all left blank here. Here is Chris's W-2. Again, he's a full-time student working just part-time at the same employer that Donna works at. 1099 INT, taxable interest here in box 1. Original issue discount here issued by a government municipality, Miami-Dade Public School. So this interest should be tax-free. Here they call it tax-exempt. Usually original issue discount means that the investors or taxpayers had bought a bond at less than the face value. But when the bond matures, they're going to get the face value, which is higher than their investment. That difference is a discount. Looks like the C is missing here. That discount is taxable to the taxpayers. And you cannot wait to when the bond matures to collect the money. You have to report the discount over the years that the bond matures. So each year it gets increasing in value. And that increasing in value is typically interest. But again, because the interest is from a municipal government, generally that interest is tax-free. But we still have to report it somewhere on our tax return. And then we have dividend income. That's here ordinary. and qualify, keeping in mind that this qualified dividends of 300 is already included in this 320 amount for ordinary. And we learned back in chapter 2, qualified dividends get taxed at a lower rate. That's why we had to fill out that capital gain and qualified dividend worksheet, which will be automatically prepared by our tax software, the ProConnect software. And then here's, of course, the blank form we had to fill in the simulation. But let's get started. Again, here we are logged into our ProConnect account. Again, usually you will see this welcome screen. Let's set up the clients here. Yeah. So I click on clients, and I'm going to add a new client with this button. So I'm going to put my data here. You can see I have it in one window. I'm going to put it on another monitor on my computer system so I can see both the data and this input screen at the same time. Real accountants would have like 2 or 3 monitors on their desk. I'm going to put Donna first here, yeah, since she's the main income earner. Also, you want to be probably consistent from year to year who you put first on the return. Okay? Doesn't really matter in terms of the calculation, but it's probably better, at least for consistency purposes, to keep the same person listed first on a joint return. So in that case here, I'm going to choose Donna and her last name. We're given that her birth year is November 4th, 1999. I'm not going to check my spelling, which you should be doing, yeah, since I want to keep this video as short as possible. But if you discover you have a typo, you can always go back and correct it before you turn in your assignment. Her ID number, that's Social Security number. So I'm going to look at her her W-2 form and see what was put there. In real life, what you should be doing is looking at her Social Security card if this is the first time that you're dealing with this taxpayer, just to make sure that it matches what the government has on file. Okay. You don't have to do email address, although you as a professional preparer, if you want to contact taxpayers, the easy thing to do is have a contact list, including phone numbers and emails. Also keep in mind, email typically is not secure, so you would not send anything confidential over email. Usually most professional preparers have what they call a portal that they can transmit files or messages to their clients. We can leave the phone numbers blank here. We weren't given any. And continue to the next screen. And here it says that I have created this client. So it looks like the order. What's the order here? I have, I think, 2 screens worth of clients. Looks like she's listed at the bottom here. You can always resort the names of the clients by clicking on the headers up here. So Hoser right here, yeah, and the H's. So I've got the client set up. I can always edit that information here, or I can now create a return for that client. But let's take a look at this menu item to create the tax return for Donna and Chris. Tax returns. So again, I'm in the 2023 tax year. I don't have any tax returns yet going. So let's create one. So the first thing I'm asked is, who is the taxpayer? And that's going to be, where's my Hoser? Okay, why is it not? Oh, it's alphabetical by first name, Donna. And then the type of tax return is 1040 that we're learning throughout this whole semester. It's going to be for the current year we're learning, 2023. And now we got to name the tax return. Automatically it puts in the name of the taxpayer. But I'm going to add on Chris here as part of the tax return name. And also I'm going to put in the tax year. So just by looking at the name of the tax return, I can tell who is the taxpayer and for what year it is. Let's go ahead and click on the next button. And I'm in the tax return. The first screen you typically see is this profile. I got a warning message here. It's telling me that in my ProConnect account, I haven't entered or verified the electronic filing identification number, the EFIN number. Our educational version of the software doesn't allow us to electronically file, so we're not going to be entering any EFIN number in our software account. So I'm going to close that. So you can see we have the federal return going, and if I also want to add on a state return, I can choose it in this drop-down list. Like maybe in a future return, I'm going to ask you to prepare also a federal and a Hawaii income tax return. But for now, let's just stick with the federal return. I don't think we need to do anything else on this screen. So let's move on to the main input procedures here on this tab. So this is a table of contents for all of the possible options, entries we're going to do for return. And you can collapse it to only work with a few at a time. So here you can close this table of contents. I'm in this first group called General. I wonder if I can bring it back again. Yeah, this General right here. Yeah. Let me work with this screen. So under General, we're going to be, again, entering client information. And most of it has already been entered. I guess I need to click on this client information. We're going to choose the state of residence here. So that's Florida for the full year. Their filing status. We're filing jointly. Yeah, Donna and Chris are filing a joint return. Married. Okay, if you wanted to, you can compare filing jointly and filing separate. Almost always it's going to be better to file jointly. Let's see. So Donna's going to be listed first. Her occupation, we're told, is nurse. And she is not a dependent of anybody. You can even leave it blank or here not applicable for Donna. She's not blind. Now, because we're filing a joint return, we need Chris's information. Again, I would be looking at his Social Security card to make sure I have his name spelled accurately and not using a nickname. The Social Security number I see for Chris. For Chris. 465579935. It's always good to learn how to use the numeric keypad on your computer. Much faster than the typewriter keypad, the numbers on the typewriter keypad. And he is a student, even though he has a part-time job. The main thing he does is being a student. We're told his birth date at the beginning of the problem is January 12, 1997. And again, they're both not dependents for anybody else. So address. Again, I'm picking this off from the W-2 form. 1001 Wren Avenue. We're not given any apartment number. The city is Miami and Florida 33166. Again, we're leaving phone numbers and emails blank here. If the taxpayer, we're supposed to, as professionals, go through some due diligence procedures, making sure the taxpayer is who they say they are, typically by looking at some type of photo ID. We're not given that information yet, so we're going to leave this blank. Also, if the taxpayer has something called a IP PIN number from the IRS, we need to enter it here to be able to file electronically. You still can mail in the return, but to have it done electronically, you gotta get that IP PIN for the taxpayer. Maybe both of them have IP PIN numbers, yeah? And it changes every calendar year. So typically in January, if you do have an IP PIN number, you're gonna get a new one mailed to you early in January. Okay, so same thing here for spouse. I think that's all we need on this screen. Again, this is the client information screen. So let's move on to the next step. Now, if we did have dependents, we would enter that information here, and you would see one tab for each dependent with their information going down each screen. And we don't have any. So let's move on. Miscellaneous info, direct deposits. I think they're going to get a refund, and we would need to enter direct deposit information here, but we weren't given anything. Okay, just some miscellaneous information here that they cannot fit anywhere else in the software. I'm going to skip this step, community property, income, and allocation. At least we're studying for Hawaii, even though we're doing a Florida return here. Hawaii is not a community property state. Okay, we're not going to give them the refund. It's going to come from the government. We're not going to file electronically. We'll use the default cover letter that's part of the tax return. They haven't made any payments beyond, tax payments beyond what's being withheld. So let's jump to the income sections, all the different types of income. And usually the most common one is listed first. Like here, the first income item is wages. So we know we have, both of them have W-2 income. So let's enter Donna's information. So I'm looking at her W-2, and I'm going to fill in this whole screen with that same information from her W-2. You got to enter the employer's ID number. Employer's ID number. It's asking me if I want to download the W-2 information, if it's available. I know this is a dummy W-2, so I'm going to just bypass this step and enter what I see on her paper or PDF version of W-2. Their state ID, we don't have any because Florida doesn't have any state income tax. Her employer name, again from the W-2, Dade University Hospital at 1925 Northwest 15th Street in Miami, Florida 33125. It's not a foreign address. This is not the spouse. Chris is the spouse, right? So we'll check off this box when we do Chris's W-2. But in box 1, I see she made $51,808. Now, if you see cents, you can type in the cents, but when you tab or enter, it'll round to the nearest dollar automatically for you. So in box 2, I need to type in what I see. Again, I'll add the cents, but it'll round when I tab to the nearest dollar. For Social Security wages, the computer automatically copies here in box 3 what it sees in box 1, which is what I also have on my paper W-2. And then based upon this, it calculates out what the Social Security taxes are. And it should match what you see on your W-2. If not, you probably need to enter here what you do see on your W-2 form. And sometimes it's different, yeah? This Social Security wages and income tax wages. Likewise, for Medicare wages, it matches what I see on my W-2 and the Medicare tax. So Let me show you my screen here. Again, this is the FAXIA we're working with. I just duplicated all of these numbers here. These numbers here. Most of it automatic. Let's enter this miscellaneous information, again with the code letter C, the code letter DD. Okay, let me move this off the screen again. Going down to box 12. The code letter is C. You can see it's for taxable group term life insurance over this 50,000 of coverage, and the dollar amount is 48. In the next line, I see code letter DD, double D. This is tax-free health benefits paid by the employer. And I think that is it. Oh, the FSA, box 14. So let's go down to box 14. And let's see. I don't see any description here that matches my FSA. So let's see. Click to expand. So I'm clicking on it to expand. And the description I see is FSA 3050. This amount is not going to carry into the tax calculation. Okay, this box 14. If it were taxable, or if there were an adjustment, it would be up here in the box 1, or somewhere maybe off here in box 12 with these code letters. Okay, I think I'm done for Donna's W-2. So let's work on Chris's W-2. So let's see if there's a button for me to do that. To move to a screen where I can list out all the W-2s, let me collapse this whole page by clicking on this button right here at the top of this Donna's W-2 screen. So you can see her W-2 is all in this one line. And what I did was just come from this details view here for that one W-2. Okay. Again, this whole screen here is Donna's W-2. So again, let me collapse and start another W-2 here, either by typing it in this row or clicking on, well, let's just type in the same employer name, for Chris. He's the spouse. And his W-2 income on box 1 is 3,600. The federal income taxes withheld. Let's see if the computer will round the amount here up to the next dollar when I tab. 171. Social Security wages, Medicare wages, and the taxes match what I see in my W-2. And I think that's it for Chris's W-2. But again, if there's more detail than what I see in this row here, I can drill into the detail by clicking on the details button. Now this whole screen is for Chris's W-2. And looks like each tab here would be one W-2. Or again, I can click on this collapse button, and one row now is one W-2. And if I have a third W-2, I could enter, start it here in this row here. Okay. At any time, as you enter information, you can always review what's on the tax return. So there's a review button here, or generate button here, and it'll create another window displaying the whole tax return, including a cover letter, including any state tax forms if you had selected states. So this is a cover letter, but let's jump to the 1040 form. So again, this is Donna and Chris, their address, social security numbers, Um, let's see, married filing joint and the total of their W-2 income and subtotal, minusing out the standard deduction for married filing joint to get the taxable income. Here's the tax just on the wage income, the amount of taxes withheld from the two W-2 forms to result in a overpayment or refund. But keep in mind, we haven't entered all of the income yet. So let me put this window on the side and then let's enter their 1099 income. So the first one we're told was the 1099 INT. So that's the next type of income here in the income category. So just like the W-2 income, one row represents one source of that type of income. So I'm looking at the 1099 INT, and it's coming from Dade County Credit. Again, you double check your spelling. I'm not going to do so in my case here. And let's see, we can skip who owns it because this is a joint return. But the amount, 655, goes here in this column for bank, savings and loan, etc. Yeah, versus the other sources of interest income. Okay, and that's it for this one 1099 INT. Let's look at the OID, original issue discount, or original interest discount. And the only number is this tax-free, tax-exempt interest. So let's go ahead and type in who it's coming from. Miami-Dade Public Schools. And not taxable interest, not from the U.S. government, which is still taxable, but municipal tax-free interest. And again, what I see is $134. Let's go to the third 1099. And it's not interest, but dividend income. So again, one row per different source of dividend income. In this case, I'm looking at the 1099 DIV. It's from Hialeah Corporation. And there's two amounts. One for the ordinary dividend, 320. The other is qualified, 300. Keep in mind that the 300 is already included in this 320. Yeah, so you don't have a total of 620, just 320, of which 300 will be taxed at a lower rate. That's the qualified dividend, and the computer is going to figure that out for us. Those are the only two amounts I see on this tax form. One more income was the $10,000 prize. So let's see if we can find the category here. I'm scrolling down the different types of income. Let's open up the big menu here. I'm going to click on this button right here. So income, here's all the different types of income. Here is what I think I want, or is it this one here? Let's take a look at this miscellaneous income. And going down the list here. And here is what I want. Notice the two columns. Each column is for each spouse here, right? And remember that Chris, who got this 10,000, is not the taxpayer, but the spouse. So the second column, prizes and award, 10,000. If you want any more detail than this, you can always open up a listing here. I wonder if I should do that. Probably I should, yeah, to document things a little bit better. So the source of the 10,000, we're told. Let me open it up here. Clicking on this plus button. The source is compositors, expanse, residence, sweepstakes. I'll leave that off. And then if there's another prize, I could put it down here in the next row and another row if I have more than one or two or three. Okay, I'll click OK. If I click on it again, yeah, and you should see the detail here that's saved. I think I'm done. Let's take a look at the return here. I can refresh the forms, and it should open up that same window we saw before. And let me compare it to my answer key. And you'll see, I'll post up the answer key so you can compare it with your tax return. I'm just looking at the totals here. Taxable income of $27,700. Tax of $41,655. Remember how we learned in chapter 1 we would look up the taxable income in the tax table or tax rate schedule? Well, you cannot really do that here for this tax return because of this qualified dividend that's inside of this total here. This qualified dividend gets taxed at either 0, 15, or 20% tax rate. And that's done on a worksheet, probably with this link over here. You know, if I go further down, again, the tax they already paid, and then they get a whopping refund of $84. Okay, that matches the result we've seen in the previous assignments. So I know I'm probably on the correct track. Make sure you have the occupations. Here is your preparer name, your company name you had set up. I want to take a look at more information about possible errors. So one of the options here at the top, we're still in this input area. But now let's jump to this check return. And you can see some possible mistakes here called critical or fatal diagnostics. Let's take a look at this fatal one here. What's really wrong? Remember we saw that EFIN message? We're not going to electronically file the returns. We can ignore that. Anything regarding electronic filing, EF, we can pretty much ignore. It's even checking whether we have employer ID numbers. Didn't I enter it? Let's double check that. There's a missing employer ID number. I'm going to enter it right here. It doesn't show up on the return itself, but this is needed for electronic filing. Okay, I'm getting this off of the W-2 form. And if I refresh the diagnostics, I should have one less. 6. Same thing here. What's missing? Employer address. This must be for Chris. I don't remember entering that information on Chris's W-2. Just the employer's name. And refresh the diagnostic. Okay, we haven't done the prepare. Well, Let me select a preparer. That's me. And even though it already shows at the bottom of the 1040, this is just to ensure that's the case. And let's see. We don't have any pin for me to e-file. Again, we're not e-filing. Third-party designee. Many preparers would have themselves assigned as the contact if the IRS wants to send out information. I would probably not do that because I want the information to go first to the taxpayer, then give it to me. Let's see, taxpayer signature date. Again, only required if we're going to be electronically filing. So we can pretty much ignore all of this. Now, what is this one here? Critical diagnostic. Computer date. Again, we're not e-filing. This would be necessary for e-filing. So let me show you some other items here under the check return link. This is a narrative summary of the information you would see on the tax return. Okay. Pretty much the same thing you see on the 1040 form. And the actual forms, remember how we saw it under the preview screen, can also be generated here, these forms. And if you had a Hawaii, you would see a state return, you should see state forms also here. Again, here's the same form we've seen before, the 1040. But what I want to do is combine all of these forms, including this worksheet. Which worksheet? Remember the one for qualified dividend right here. This is used to calculate out the low tax on the qualified dividend. And here's the ultimate total tax liability. Okay, so I want to generate one PDF file that you're going to be reviewing and turning in. So that's this last step here, file return. And I don't see an option to e-file, electronically file, which most tax returns in real life are done. But we're going to be printing out the PDF file and the whole complete return. This client copy. And let's create it. And then download the PDF tax return. So you can review this, compare this to the answer key that I'll post up, specifically the 1040 form and the schedule number 1. This form is used for electronically filing, permission from the taxpayer to electronically file, so we can ignore that. So here's the main form, the 1040. Page 2 of the 1040. And then schedule number 1 that reports the miscellaneous $10,000 prize income. On the back side would be any adjustment deductions, which we don't have any. And let's see, that worksheet is probably at the beginning here. Again, the qualified dividend that gets taxed at lower rates. In our case, the $300 taxed at 0. Or higher income taxpayers would be taxed at 15% or 20%. The reason why this worksheet is real long is because possibly the qualified dividend, some of it may be taxed at 0, some of it be taxed at 15, and higher income, some of it taxed at 15 or 20. And that all depends upon these bracket amounts here, the income brackets here, and then down over here. But anyway, that's a worksheet. Okay, so review it. And if it looks good, save it and upload it at our Laulima assignment site. That's down here in the assignment, right over here. Okay, if you have questions, you can always email me or come to the live class meeting.